Hello everyone and welcome to Moementum channel. In this video, I wanted to share with you one of the main websites that I use for analyzing the stocks before I decide to buy or sell any of the stocks that I'm interested in. So what we're going to do, we're going to focus more on the pieces of information that relates to you and is more important for you. So one of the key websites that I refer to when it comes to analyzing the stocks is called seekingalpha.com. And this is one of the main websites that I use aside from some of the other resources, as well as, of course, looking at the company's quarterly earnings report and the news around the company. What I'm going to do, I'm going to walk you through it in this video, give you a practical example. We're actually going to take a look at the stock of Apple, which is a very common company. Most investors I think are familiar with it and perhaps have considered adding it to their portfolio. So we're going to look at it through the information provided on seekingalpha.com, walk you through the most important pieces of information, and I'll let you know how I analyze it and how I kind of interpret the results and the data as I see it on the website. So let's get into it. All right, so once you type in seekingalpha.com, you're going to land on a page that looks something like this. It is best if you create a free account here that allows you to access a lot more features of the website. Otherwise, the amount of information provided to you is limited. As I mentioned, you can just simply sign up for free and get access to the most important pieces of information on seekingalpha.com. So next, we're going to type for the company that we are looking for. The company is Apple. You can see Apple Incorporation, and the ticker symbol is AAPL. The ticker symbol we refer to usually the 3 to 4 character that represents the stock in the stock market. For Apple, it is AAPL. I'm going to click on it. You're going to land on the main page for Apple stock on seekingalpha.com. So you can see there are a number of information that you see here on the screen. For example, you see what is the latest stock price for Apple. Currently, you see it's $116.03. It also shows you how much the stock price went up or down compared to the last trading and in the last trading session. So of course the stock market was closed on Thanksgiving, but the day before that the stock went up by 86 cents US cents, and it shows 0.75% increase for the stock. That's why it's shown in green font. There's also a post-market. There are a number of stocks, especially in those that are traded in the US stock market, that can be also traded after the market has closed, and those are shown by post-market. Similarly, in the beginning of the day, before the market's open, you can see how is the stock doing from a pre-market price. So it just goes to show you that the stock probably did a little bit more positively even after the stock was closed. Scrolling down here on the page, there are a number of other information that you could see here. For instance, you could see what is the 52-week price range for the stock. And if you scroll over it, it just shows you that the lowest and highest price at which this company has been traded over the past 52 weeks, which is a 1-year time frame, is shown here. And the dot on this chart shows you where it sits. So, for example, the price of 116, it's closer to the high end of the range, right? 137. So it's closer to that range and far away from the 52-week low price. This essentially tells you that within the past 1 year, the Apple stock has fallen as low as $53.15 and has gone up as high as $137.98. And also tells you down underneath that, you also see that what has been the stock price range within that day. So on the last trading day where Apple was being traded, the range was as low as $115.17 to as high as $116.75, and ended up closing on this spot, which was, as we talked about earlier, $116.03. You could scroll and use different options here. For example, the 1-year return over the past 1 year, Apple stock, investors in Apple stock has seen a 74.24% return. If you scroll to 5-year, in the past 5 year, Apple stock has had a tremendous run, showing 293.22% return. The 10-year return has been a massive 932+%. You could also play with this, of course, go 6 months, 1 month, 5 day. For example, here is showing negative in the past 5 day. past week, so to speak, the stock price has gone down by 1.69%, as well as one day, as we saw earlier on. A number of other information. What is the price to earnings in terms of forward-looking price to earnings? And the beauty of the Seeking Alpha is, especially if you're not as familiar with some of these terms, as you scroll over it, you can see the description is shown on the screen. Forward price to earnings ratio, as seen here, is a forward-looking version of the conventional price to earnings ratio. What it allows you to know is based on forecasted earnings for the company, and they're kind of taking that into account and comparing it to, you know, their existing price price for each share, and based on that, taking into account also the forecasted earnings for each unique share. What would that be? So for Apple, you're going to see that their forward price to earnings ratio is sitting closer to 29.37, which is way better than their current price to earnings ratio, because their current price to earnings ratio is somewhat higher than 35. So usually for price to earnings ratio, the lower the multiple, the better it is for the most part. So for example, here we are saying that if Apple, at this price, Apple is actually being traded at 29 times its forecasted forward earnings per share. If it was showing a price to earnings ratio of 20 or under, usually that's considered to be quite decent. Now, again, keep that in mind. It depends on the industry that the company is being traded on as well. Some industries and some sectors tend to have typically higher price to earnings ratio, and on the other hand, there are some industries and sectors where the price to earnings ratios are usually a lot lower. For example, if you're talking about finances and banking, financial institutions, banking, their price to earnings ratio for the most part right now is hovering around 10 to 15. So if you're looking into a company within that same industry that has a much higher price to earnings ratio, you have to do a proper research. Why is that? Is it justified or it's not? A lot of times, of course, if the company has a lot of great prospect in future for it, the revenue is growing very fast, and the investors are very bullish about it, they tend to have a higher price to earnings. It also shows you what is the dividend rate forward looking for that. Forward dividend rate, it has a definition. The forward dividend is expected to be 82 cents, and the forward dividend yield is showing 0.71%. Apple is one of those companies that is very much focused as a growth company, and as a result, they don't pay a huge dividend. They're going to take a look at it. There's a section dedicated for dividend, and you can dive deeper into those measures. The market cap shows you the size of the company, and it's equals to the total value of the company when you get each of their share prices, the one that you just saw, 116, and you multiply it by the total number of outstanding shares for the Apple company. There are a number of other pieces of information in terms of news, analysis parts, and etc. Well, the other part that I'm quite interested in is the financial section. I think that's something that many investors should definitely get familiar with and know how to look at and interpret. And here you have a number of key statements and pieces of information. So for example, underneath here we have income statement, which essentially allows you to take a look at the income and the revenue as well as expenses for the company. You also have balance sheet and the cash flow statement. Let's just take a quick look at the income statement. So in this income statement, you have the company's revenue, and here, as you can see, they're all reported in $1 million USD, and they're showing based on the annual, the fiscal year, as well as you have the trailing 12 months. So in the past 12 months, how's Apple doing when it comes to any of these metrics? So for revenue, I'm quite interested in the total revenue. What's the overall total revenue that this company is making? What you would like to see, hopefully, for a company is that they're showing a consistently growing revenue over time. So let's see if that's the case for Apple. Back in the fiscal year 2016, ending in September 2016, Apple was showing a $215 plus billion in revenue. Later on, next year, it went up to 229 billion, next 265 billion. The next year, in 2019, it went down a little bit, but not by so much, but it's actually showing 260 billion. Again, then this year, it's gone up and showing $274 billion. So of course, there's that 1 year that the revenue went down. Nonetheless, overall, we are seeing, for the most part, we are seeing a considerably, consistently growing revenue, total revenue for the company. But what's also important for you also is taking a look at their income. And one of the other pieces I'm sure that I look at is actually their net income. This is what is left for the company after deducting all of their expenses. What is their net profit, their net income? So here you could see they are showing 45 billion in 2016, 48 billion, 59 billion. Understandable, so it went down. That's the same year that their revenue went down. So 55 and then showing now 57 billion. So Apple is definitely a very profitable business, showing $57 billion in the trailing 12 months as well for their net income. Next piece of information I'm interested in, I'm gonna scroll back to the balance sheet. Here you could get a sense of what's the assets of the company possesses, and what portion of their assets are more of a current assets, the ones that allow the company to be easily liquidated within the next 12 months. Obviously, the higher their current assets and total assets, the better. You do want to compare their assets to their liabilities. In fact, what they own, the higher the better, versus what they owe to other people, whether it's a loan, whether it's a debt, or whether they have to return some funds to their stakeholders, shareholders, or customers, you name it. You always want to make sure that their total assets is higher than their total liabilities, as well as you want to make sure that their current asset is higher than their current liabilities. Of course, there might be cases where this doesn't happen and your liabilities might be higher than your assets. Well, of course, this is a red flag. It's not end of the world. There are cases where this happens. So you want to take a look at these metrics with a grain of salt and take a look at various aspects of the company. Is it justified that the company maybe has potentially higher debt than what they own in terms of assets? Okay, so let's take a look at Apple. In terms of their current assets, total current assets, you can see here how it's evolved over time. It's continuously growing, except for, again, 2020, the number has declined a little bit. And if you scroll down on the graph side, you can see it shows you even the changes in a graphical format. This is nothing necessarily to be worried about, because $143 billion in assets, I think, is just an incredible number. Nonetheless, it would make more sense if we compare it now to their current liabilities. So let's scroll down to the current liabilities, the total current liabilities. You can see here we are seeing different numbers, but every year their current liabilities is less than their current assets. So for example, in their trailing 12 months is $105 billion in liabilities, current liabilities, and their current asset is 143. So 105 compared to 143, definitely liabilities less. How about their total assets versus their total liabilities? So total assets here is showing 323 billion. So that's definitely a very solid sign for us. Apple is showing that their assets, both in terms of the total assets and current assets, will surpass their liabilities, both in terms of current and total liabilities. Now, moving on, we want to take a look at the dividend section of the website. And here you can see that Apple is showing a forward dividend yield of 0.71%. Their forward annual payout, how much you're going to earn in terms of dividend, is 82 cents. Their payout ratio is showing 20%. The payout ratio shows you what proportion of the company's earnings they're paying out to shareholders in form of dividends. Usually you want to ideally see a smaller number, because particularly for companies that are focused on growth, this shows that the company then has enough money to then strategically reinvest that money into growing the company, expanding the business, and hopefully reward the shareholders in leaps and bounds by increasing an appreciation of the stock price. For tech companies such as Apple, the fact that their dividend payout ratio is sitting at close to 21% is very decent. That also tells us that they have a lot more room to grow their dividend in the future years. So that's definitely a very solid amount. For me, I would definitely like the payout ratio to be below 60%, hovering around 60 to maximum perhaps 65%. Anything above that is usually not a good sign. There are some companies that you can see their payout ratio is over 100%, and that's definitely a very, very high red flag for you, because it just shows you that the company is paying more than what is earnings in terms of their earnings back to their shareholders. Most likely they have to go into debt to try to sustain and actually afford paying out those dividends. So that's not a good sign, and potentially those type of companies would cut their dividends perhaps to some extent, or cut it altogether in order to be able to survive. The only exception to high dividend payout ratio is for real estate investment trusts. They have a different business models, and for those type of companies, they tend to pay a very high portion of their income and earnings as dividend or distribution back to the shareholders. You can see some details how Apple has grown its dividend over the past 5 years, on average 10.5% per year, and the dividend growth, they have increased their dividend over the past 9 years. Right, then the last section that I want to show you is their profitability section, and here's where you can actually compare Apple to the sector's median, how they're doing compared to their sector across a number of metrics. Such as their gross profit margin, their net income margin, their return on total capital and whatnot. And similar to other metrics, it gives you a wonderful opportunity to really do some proper comparison and analysis of the Apple stock. There are lots of other information on this website that I didn't really walk you through in this website, but I think those are some of the most important piece of information that as an investor you want to make sure you take a look at and get familiar with when it comes to analyzing a stock. So be sure to take a look at seekingalpha.com and do your own research when it comes to any of the stocks that you're interested in and planning to buy potentially. Have you used Seeking Alpha in the past to analyze the stocks? Or do you use any other website to analyze the stocks that you're interested in? Let me know in the comment section down below. I hope you found this video beneficial and provided something of value to you. If you did, please be sure to give it a thumbs up and share it with someone who might benefit from the video as well. By the way, don't forget to subscribe to Moementum channel. Here on Moementum, we post weekly videos about stock market investing, finances, and financial freedom. Hope to see you next time.